Hello, my name is Charlie Kimbell, and I'm the state representative representing Woodstock, Reading, and Plymouth. Today I want to take you through the presentation of a bill that I presented on the floor last week. It's S51, and it's an act relating to tax credits. So this is a continuation in the series of informational sessions we're doing with Woodstock Community Television. It's a great opportunity for me and the other representatives to share with you what it's like to actually be in the legislature and what those topics are that we're covering. What I'd like to do today is to actually present to you a floor presentation on a particular bill to give you an example of the types of things we do in the legislature, kind of an insight as to the information of the policies that we are proposing and some of the information that we want to give to our fellow legislators. This is on S51. It's a bill that I presented to the legislature last week, and it's on tax credits. So it's a fairly complex subject, trying to make it simple for everybody to understand. So with that, I'll just go into the bill presentation. Imagine, if you will, that there's a room full of 150 people, all legislators, and the speaker has just introduced the bill and asked me to present it. So here we go. Madam Speaker, I am pleased to present to you and to the Chamber this strike-all amendment to S51 on behalf of the Committee on Ways and Means. S51 is an act related to the unpaid caregiver Vermont tax credit as passed by the Senate. If adopted by the House, it will be renamed an act relating to Vermont income tax exclusions and tax credits. You will remember that your Committee on Ways and Means had previously in this session voted affirmatively on H-483, a committee bill entitled An Act Relating to the Expansion of Existing Income Tax Credits. The House recommitted the bill to the committee for further consideration. The proposals contained in H-483 are contained in this strike-all amendment to S-51. What is new is the committee's proposal to expand income tax exemptions for military retirees, including survivors' benefits, and to establish a refundable tax credit for low-income veterans. If approved, all of the tax credits contained in S-51 total $13.5 million in foregone revenue to the general fund. Members will find an updated fiscal note dated May 5th on the Joint Fiscal Office website by clicking the Publications tab and then selecting Fiscal Notes from the drop-down menu. Alternatively, search the bill number on the legislative site and click on the fiscal information and view the Ways and Means Draft 1.2. Members can find the strike-all amendment is posted in today's action calendar starting at page 2021. Madam Speaker, your Ways and Means Committee is focused on raising revenue for the support of government and also to ensure that the tax system works for all Vermonters, to equalize the public burdens, and that the tax system reflects the priorities of the people of the state. Tax credits are an important part of that tax system. This bill, S51, is an important revision to our body of tax credits. The Joint Fiscal Office, as required by statute, provides an in-depth analysis of all tax credits and exemptions every 2 years in their tax expenditure report. It is one of the most anticipated reports from the Joint Fiscal Office, well, at least in the Ways and Means Committee. Quoting from their report, quote, tax expenditures are statutory provisions that reduce the amount of revenue that would otherwise be collected to encourage a particular activity or limit the amount of taxes collected from certain persons, end quote. So who are the certain persons addressed in S51? They are low-income households without children, often living paycheck to paycheck, who continue to be taxed even when they are at or below the poverty level. They are households with children who have the highest household expenses in their lives and the lowest household income. They are seniors with low and moderate fixed incomes who are impacted significantly from rising prices. They are military retirees who have served our state and our country in uniform. They are military retiree survivors who continue to live in Vermont and be members of our communities. And lastly, they are those veterans who are struggling to make ends meet, individuals who don't often get the recognition or respect that they have earned. So what does the bill do? First, It increases the refundable earned income tax credit for tax filers without children to 100% of the existing federal amount. This does not affect the earned income tax credit for claimants with children. The earned income tax credit for tax filers without children requires that the filer has earned income, meets the income guidelines, capped at $19,104 for single filers and $26,214 for married filers, and has less than $11,950 in investment income. The proposal is to increase the refundable credit for these tax filers to 100% of the federal amount, raising the maximum benefit from $247 to $649. Madam Speaker, the Earned Income Tax Credit has been proven to lift working people out of poverty. In 2021, as part of the American Rescue Plan Act, the federal program for workers without children was temporarily expanded. First, by age, by adding workers aged 19 to 24 and workers over 65. Next, by raising the income eligibility thresholds. And lastly, by increasing the benefit paid to a maximum of $1,500. In Vermont, we saw an increase in claimants to about 28,000 in 2021, but that dropped to 11,600 in 2023, 2 years after the temporary expansion of the federal government program expired. The average benefit for claimants without children in 2023 was $128. By increasing the percentage match to $100 of the federal program, we are giving greater relief to lower income, working Vermonters who need the help. JFO estimates that 12,000 tax filers will file claims for the Earned Income Tax Credit without children. The fiscal impact is to add $3 million to the existing tax expenditure. Second, S51 as proposed increases the child tax credit by increasing the age of qualified children from age 5 to age 6. Approximately 27,000 children from 21,000 different households are claimed under the child tax credit. This is a refundable credit equal to $1,000 per child, available to households with less than $125,000 in adjusted gross income. The credit phases out by 2% per $1,000 in income above $125,000 and is not available to households earning more than $175,000. On the federal level, the child tax credit was introduced in 1997 as part of the Taxpayer Relief Act. It has been adjusted over the past 27 years, and in the Tax Cuts and Jobs Act of 2017, the tax credit was increased to $2,000 per child and made limits to the refundable amount of up to $1,400 per child. In the American Rescue Plan Act of 2021, the child tax credit was temporarily expanded for 2021 to $3,600 per child younger than age 6 and $3,000 per child up to age 17. ARPA temporarily made the credit fully refundable. The child tax credit reverted to previous payment levels for the 2022 tax year. While the current federal tax credit applies to households with children under 17, Vermont limits eligibility to children up to age 5. Increasing the age to 6 is expected to increase the number of claimants by 18.5%. The fiscal impact is $4.5 million in addition to the existing program. Third, S51 as proposed raises the income threshold to exempt Social Security benefits and certain federal retirement income when the tax filer's adjusted gross income is less than $55,000 for individual tax filers or $70,000 for joint filers. The exemption phases out for both types of tax filers over the next $10,000 in income. The income threshold applies the same way for tax filers who receive retirement income from the Civil Service Retirement Services, or system, but their exemption is limited to $10,000. The Joint Fiscal Office estimates that raising the income thresholds will result in an additional $2.1 million in foregone revenue annually. Fourth, S51 reframes and expands the tax exemption for military retirement pay and survivors' benefits. In current statute, the exemption for military retirement pay is subject to the same income thresholds as the exemption for Social Security benefits. And the exemption is limited to $10,000, the same as the other federal retirement income. And if they have Social Security benefits as well, they have to choose one of the exemptions, not both. S51 allows tax filers to exempt 100% of their military retirement pay if they have adjusted gross income below $125,000. The exemption gradually phases out to zero at $175,000, regardless of their single or joint filing status. It removes the $10,000 limitation in the existing system and allows filers to also claim the exemption for Social Security income subject to the thresholds. Madam Speaker, this exemption for military retirement pay applies to all 8 uniformed services: the Army, the Navy, Air Force, Marines, the Coast Guard, Space Force, National Oceanic and Atmospheric Agency Officer Corps, and the Public Health Service Commissions Corps. It is important to remember that not all military retirees are veterans. It is important to remember that all military retirees are veterans, but not all veterans are military retirees. Military retirees qualify for retirement benefits by serving in the uniformed services for 20 years, with some exceptions. They are eligible to receive those benefits immediately upon retirement. Many are in their 40s and start second civilian careers. They can earn retirement benefits from their civilian employer and Social Security benefits in that second career. Veterans, on the other hand, have served in the uniformed services, but not long enough to qualify for retirement pay. Their service could be of short duration, even as long as boot camp. This particular exemption on military retirement pay does not apply to them. There are 3,921 military retirees in Vermont, of which 3,593 are receiving benefits. The Joint Fiscal Office estimates that of those retirees, 1,583 will qualify for the full exemption, and 627 more will qualify for a partial exemption. S51 also exempts Vermont military retiree survivor benefits. As of 2022, there were 751 survivors receiving survivor benefits, a result of a military retiree having purchased a survivor benefit for a spouse or dependents as a continuous lifetime annuity. The total annual benefits paid in 2022 were $8.9 million, or $11,808 on average. The total fiscal impact of this exemption for military retirement pay and survivor benefits is $2.5 million. Fifth, S51 establishes the Vermont Veteran Tax Credit. The bill provides a $250 refundable credit to all veterans with adjusted gross income below $25,000. This credit phases out to 0% at $30,000. The U.S. Census Bureau estimates that there are 34,076 veterans in Vermont. According to the Veterans Administration, 15% of veteran households have adjusted gross income at or below $25,000, or 5,200 veterans. The fiscal impact of this is $1.4 million. The Ways and Means Committee heard from the following witnesses: members of the General Assembly, a senator from Addison County, the reporter of this bill, the representative from Milton, a sponsor of H43, the member from Stowe, a representative of H43, Legislative Counsel, Office of Legislative Counsel, a senior fiscal analyst of the Joint Fiscal Office, the Director of Community Planning Revitalization at the Department of Housing and Community Development, the Tax Credit and Grants Coordinator at the Department of Housing and Community Development, the President of the Preservation Trust of Vermont, the Deputy Commissioner of the Department of Taxes, the Senior Fiscal Analyst of the Department of Taxes, the Executive Director of the Vermont Association of Areas on Aging, Associate State Director of Advocacy and Outreach for AARP of Vermont, the Policy Director of Alzheimer's Association Vermont Chapter, a political organizer for the Vermont Federation of Teachers in Vermont, the Executive Director of the Vermont State Employees Association, the legislative liaison for the Vermont Low Income Advocacy Council, the executive director of the Vermont National Education Association, the economic security policy and outreach director of Public Assets Institute, the executive director of the Public Assets Institute, the policy director for the Voices for Vermont's Children, the president of the Professional Firefighters of Vermont, and the director of Government Affairs of Lake Champlain Regional Chamber of Commerce, the Adjutant General of Vermont National Guard, the Deputy Adjutant General of the Vermont National Guard, the chairperson of the Governor's Veterans Advisory Council, the director of the Vermont Office of Veterans Affairs, the enrollment officer of UVM's Army ROTC program, and the widow of Brigadier General Michael Heston. Madam Speaker, your Committee on Ways and Means voted to support this strike-all amendment by a vote of 10-0-1, and we humbly ask for the body's support. So that was my floor report on S51. Luckily, it was successful in garnering 142 votes in favor and 2 votes against. And now it is on its way to the Senate, and they will, I'm sure, appoint a conference committee to come back and negotiate with the House because it didn't include one of their important elements. So that's an example of what it's like to have a bill reported on the floor. I hope you enjoyed it. Thank you.